NIO stock closed Thursday session slightly higher, up 4 cents or 0.59%, finishing the day at $6.89 per share. It was a quiet trading session, one that didn't grab headlines or generate buzz, but that kind of calm can sometimes tell its own story. After a week marked by volatility, lawsuits, and sentiment swings, Thursday felt like a collective pause. No big moves. No panic selling. No euphoric buying. Just balance. And in a market like this, that kind of quiet stability can be a signal worth noticing. Let's unpack what happened today, what's shaping the stock's current behavior, and what investors should keep in mind heading into Friday and the weekend. To start with the obvious, NIO's movement today wasn't dramatic, but that in itself is significant. The stock has been trading inside a narrow range for several sessions now, hovering between $6.70 on the downside and just over $7 on the upside. Each time it tries to move decisively in one direction, it seems to pull back toward the middle. That pattern suggests that the market is digesting, processing the shock of recent events and waiting for more clarity before committing to a new direction. The biggest event still lingering in everyone's mind is, of course, the lawsuit from Singapore's sovereign wealth fund, GIC. The fund's lawsuit alleges that NIO inflated its revenues through a related party battery asset company called Waning, allowing the automaker to record sales prematurely. NIO has denied the accusations and pledged to defend itself vigorously, but for now, that overhang remains. Since the story broke, the stock has been in a sort of emotional equilibrium, part fear, part resilience. Investors understand that legal challenges can take time, and without any new developments or official statements from either side, the market is left to speculate. And when the market doesn't have new information, it often reverts to balance, which is exactly what we're seeing here. Thursday's modest gain might not seem exciting, but it's a sign that selling pressure has eased. After the steep drops of the past 2 weeks, the fact that the stock is holding its ground near $7 is an early indication that buyers are beginning to defend that level. That brings us to one of the key themes of today's action: stabilization. In the stock market, there's a big difference between weakness and stabilization. Weakness is when a stock keeps making new lows and buyers are nowhere to be found. Stabilization is when the stock stops falling, even if it isn't rising yet. It's when the market collectively says, okay, this is probably low enough for now. And that's what appears to be happening with NIO. The stock's base seems to be forming in that 670 to 690 range. Every time it dips toward the lower end, it finds buyers. Every time it pushes higher, it meets light resistance but doesn't collapse. That's a positive sign for those looking for a floor to form before a potential recovery. Now, what's behind this stabilization? First, some short-term traders who sold aggressively during the panic have likely started to close their positions, taking profits or simply stepping aside. That alone reduces selling pressure. Second, broader Chinese equities showed mild improvement today. Stocks like XPeng, Li Auto, and BYD all traded mixed to slightly higher. That created a bit of a supportive backdrop for NIO. When the entire sector steadies, individual names like NIO tend to follow. Third, there's a technical component. NIO has tested this same 670 area multiple times over the past week, and each time it's bounced. That creates what traders call visible support. The more times a stock holds at a level, the more investors believe in that level. It becomes a self-fulfilling foundation of sorts. So while today's move wasn't dramatic, it was part of a pattern, a slow but steady effort by the market to build stability in a zone of uncertainty. But make no mistake, the uncertainty hasn't disappeared. The lawsuit remains unresolved. Trade tensions between the United States and China continue to simmer in the background. Investor appetite for Chinese-listed equities remains fragile. And global risk sentiment is cautious as central banks around the world weigh inflation, interest rates, and growth. What that means is that any optimism around NIO right now has to be measured. The company isn't out of the woods yet. But for the first time in several sessions, it's not sinking deeper either, and that's something. Now let's talk about the technical landscape. The chart shows a clear trading range between $6.60 on the bottom and $7.20 on the top. This is the range that has contained NIO's price action all week. Breaking below 660 would likely trigger a fresh wave of selling, possibly pushing the stock towards 620. But if it can sustain momentum and close above 720 on meaningful volume, that could signal that the base is set and that a short-term recovery phase is underway. For now, the price is right in the middle of that range, balanced, neutral, waiting. This in-between zone can be frustrating for traders who prefer clear direction, but it's often where longer-term investors quietly accumulate positions. When fear subsides but confidence hasn't yet returned, volatility shrinks, and that's often the prelude to a bigger move later on. So while the chart looks boring, the psychology underneath is important. The panic of last week has cooled. The skepticism remains. But the emotional extremes have softened, and that's when real price discovery starts. Zooming out from the short term, NIO's long-term story still revolves around its ability to grow its electric vehicle ecosystem in China and beyond. The company's battery swap network remains a differentiator, with record daily service volumes reported earlier this month during China's Golden Week. Vehicle deliveries remain solid, up 41% year-over-year in the third quarter. The company continues to expand its service footprint and refine its manufacturing efficiency. These operational metrics suggest that NIO's business is still on track, even as its stock faces turbulence. That's an important distinction for investors to remember. The lawsuit may dominate headlines for now, but it doesn't necessarily change the day-to-day operations of the company. The market may be cautious, but the business continues to move forward. What NIO needs most at this point is time for legal clarity, time for sentiment to rebuild, and time for performance to speak louder than speculation. Thursday's modest uptick might feel insignificant, but it fits the profile of a market entering that period of quiet recalibration. It's the phase where traders watch for confirmation and where long-term investors start looking for value. Now, if we take a step back and look at the broader picture, it's been a rough month for Chinese EV stocks as a whole. Valuations have compressed sharply as global investors repriced risk. Much of this isn't specific to NIO, it's sector-wide. Rising competition, tightening consumer budgets, and shifting government policies in China have all contributed to uncertainty. Yet, despite that backdrop, NIO continues to innovate. The company's new generation of battery swap stations, its partnership initiatives, and its focus on premium service continue to differentiate it in an increasingly crowded market. In other words, while investors may be nervous, NIO isn't standing still. Still, markets rarely reward patience immediately. Sentiment often takes longer to heal than fundamentals do to improve. That's why the coming weeks will be critical, not because of dramatic news, but because of how the stock behaves in this quiet period. Can it hold its base? Can it start forming higher lows? Can it gradually attract new buyers without sharp spikes or collapses? Those are the subtle signs of recovery that don't make headlines but often mark the beginning of a new phase. As we head into Friday and the weekend, keep an eye on volume. If volume remains light and price stays stable, that's confirmation of consolidation. If volume increases and price begins to climb above 7, that could be the start of renewed buying interest. The opposite is also true. A drop below 660 on heavy volume would suggest that sellers aren't finished yet. But as of now, the data leans slightly positive. The market isn't panicking. NIO is holding steady. And that's a refreshing change after the wild swings of recent weeks. So, what's the takeaway from today? NIO's gain was small, but meaningful. It reflects a market trying to find balance after chaos. Investors aren't rushing back in, but they're also no longer rushing out. The lawsuit remains unresolved, but fear is no longer the only emotion driving the price. For long-term investors, that's exactly the kind of environment where opportunity often begins to form, quietly, gradually, in the background of a market that has stopped shouting. As the saying goes, calm seas never made a skilled sailor. NIO has been through its share of storms, and this latest one, though serious, may eventually prove to be another test of endurance rather than a fatal blow. For now, the focus remains simple: hold the base, rebuild trust, and wait for clarity. NIO ends Thursday not with fireworks or fear, but with quiet determination, steady at $6.89 per share. And that's your Thursday aftermarket update on NIO.